Well, I think we... Can everyone hear me if I... Is that microphone on? Can you hear me at the back? Yes, good. Okay. Right, well, I think we're going to have a fireside chat here. I had one of those heart-in-the-mouth moments when Iqbal suggested that I might be doing the keynote speech, which I wouldn't have been able to match Max's superb explanation of what we, the Islamic Insurance Association, have been doing over the last 4 years and where we see ourselves now. Just briefly, I'm David Whear. I'm a partner at Norton Fulbright law firm. We've been involved in the Takaful sector for many years now, and have seen the opportunity that it presents to London and the wider market. The London insurance market has always demonstrated an ability to seize an opportunity and not to be burdened, I guess, by conventional procedures. And that buccaneering approach has created what I suppose we might argue to be the most important insurance market globally, as Max pointed out earlier, particularly in the wholesale arena for complex commercial risks. So it's no surprise, I suppose, that London has seen the opportunity that Takaful presents. Max talked about the relatively small proportion of Islamic finance assets as relative to global assets. Another statistic that struck me when I was having a look earlier yesterday was that we're going to hit around about 5.1 trillion. That's 5.1 trillion. That's quite a large number of noughts, 12, I think, of insurance premium globally in 2019. Now, Takaful contributions are going to be around about 20 billion for 2019. So that's less than 0.5% of the global insurance market capacity. And as we heard earlier, the Muslim population represents about 25% of the global population. Now, of course, you can't correlate those two statistics, but there is an enormous gap that needs to be filled, and as we heard, that is not a niche business. So, what we would like to do today is explore some of the issues that are perhaps restricting the development of Takaful products in the United Kingdom, what we can do to develop the business. And so I'm delighted to have such an esteemed panel of practitioners and those who've been working in the London market and in the Takaful business specifically for a number of years. So perhaps if I get you guys to introduce yourselves. Start with Mohammed.
Good morning. My name is Mohammed Khatb. I'm the Managing Director of the Treaty Division at United Insurance Brokers. We've been working extensively with Takaful and Re-Takaful companies for many years now, servicing them out of our London office, but also out of our Dubai, Malaysia, and Singapore operations to ensure we give them access to the international markets.
Morning, everybody. My name's Plumb. I'm a director at Cobalt Underwriting. I've been at Cobalt the last 2.5 years, focusing ostensibly on Takaful business. We're a Shariah compliant MGA based in London. Prior to joining Cobalt, my background, I've got 25 years in underwriting, based in the company and Lloyd's market in a lead capacity, focused mainly on property, international property, D&F and energy business. 7 years of that was spent in Australia and in Southeast Asia. So I have got experience of working in the Southeast Asia regions, the GCC regions. So I hope to bring that to bear on Cobalt.
Good morning, ladies and gentlemen. My name's Dave Matcham. I'm the Chief Executive of the International Underwriting Association. We are the trade body in the London market representing insurers and reinsurers who operate outside of Lloyd's within London. We work closely with Lloyd's and with the brokers on many issues, one of which has been the formation of the IIAL. I sit on that steering committee, working with all the London market participants to promote this type of business.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullah. Good morning, everyone. My name is Zubair, Miah. I'm the internal share scholar for Cobalt Underwriting. I work with Anne. As Anne explained, Cobalt is a MGA, and my responsibility within the company is to ensure that Cobalt itself is Shariah compliant, and all the business activities within the company is also Shariah compliant.
Okay, so thank you to the panel for those introductions. I should say, obviously, we're going to have a conversation around a number of issues here, and I'll be asking the panel some questions. But I think we're very happy, indeed more than happy, if, as we go along, if there are any comments or questions that you have and that you want to put to the panel in relation to a particular topic, whether that's what we're discussing at the time or not, please do so. Just raise your hand and I'll try and keep an eye on any questions as they come. So hopefully we're all comfortable with that, folks. I think so. I just wanted to really start and sort of linking back to Max's introduction around what the Islamic Insurance Association of London has been doing in relation to the guiding principles, Dave, actually, for you. And they were launched, obviously, at the back end of last year by John Glenn MP, and I think to a reasonable amount of fanfare. But perhaps you could explain why we spent the time we did in devising those principles, I think, as a starting point, and then we can go on from there.
Yeah, the association, as Max said, was formed about 3 years ago, and the principles really were the culminating piece of that phase one work of the association. We'd done educational activities, we'd been promoting the sector, exploring who in the market may be interested or currently involved. And we noticed perhaps a lack of consistency in some of the approaches. We felt that London needed to show leadership to the Islamic community, that it was, as Max said, ready, willing and able to provide this coverage. And so it seemed to us that the logical step was to have a set of guiding principles, not standards. That would have been probably too far at that stage to go, but some guiding principles that would explain the operation of the sector, all the necessary steps that you'd need to ensure you perform accurately. And this could be, therefore, the launching pad or a catalyst for a greater demand for the business, and also for more windows to be formed or more insurers to be interested in supplying the product. It was a natural end to the first phase of the association's work. It's key now to look forward, which I'm sure we'll discuss, as to what the next step should be. But they were well received. They were accredited by all the correct governing bodies for the sector. The government welcomed them. As you say, they were launched by a government minister, which showed their continued clear commitment to work with the industry to promote this important part of the Islamic picture, somewhat the missing link, has been said before, given the strength of Islamic banking at the moment.
Thanks. And I suppose to other panel members maybe, is there a sense of any positive developments as a result of those principles?
Okay, I don't want to be the bearer of bad news, but so far I've really seen no impact from these principles. I fully understand the motivations for doing them, and I fully accept that London is in the position to lead the way, and I think that's absolutely correct. And I also understand that a lot of time has been spent on this, but so far to date, we've seen no impact on business flow. I think there's a number of factors around that. I think that it's combined with the whole market at the moment, that particularly in the Lloyd's market, there's been a capacity crunch, for want of a better word, and underwriters have obviously just retreated into more comfortable areas of business. So maybe in the future there will be more evidence of impact, and maybe there's, in the meantime, during this current phase of the market, more work can be done on the principles.
And sorry, Dave, I was going to say, but they're there as a matter of record now.
Yeah.
So they're a basis for any form of elevation or promotion of the product, a catalyst. Perhaps there's a group of carriers out there who want to show some leadership and to basically see it as or potentially even a lost leader to create a market for this product down the line. So, well, I accept what you're saying, and it's a difficult market for London at the moment.
I think, it's like anything, isn't it? You develop a framework, you're not going to see within, a 6-month period any immediate impact. I suppose though, Anne, have you seen over the last 2-3 years any heightened interest in Takaful, or would you say London remains reasonably flat in terms of?
I think there's two of us can talk
talk
about this, obviously. So I think where we've seen the most heightened interest has been from Pakistan in the last couple of years, and that's certainly where more interest has come from, that market in particular. We've certainly had a number of conversations with a number of carriers around developing products in the UK, and that would be much more in the smaller personal lines type project area. So that's something we're working on specifically at Cobalt. But beyond that, definitely Pakistan, and definitely interest from Malaysia as well. And again, it's a chicken and egg situation, because I think once there is more publicity, there are more articles around what different markets are doing, then interest will follow. An old colleague and friend of mine is speaking tomorrow, who works for the World Bank, and they've got particular interest in Indonesia at the moment. So he approached us to talk about Re-Takaful simply because there is he's come across that as a need in Indonesia. So again, I think it is developing, but as Max said, these things are taking a long time to develop, and as an insurance community, we have to take the lead and we have to invest our time and energy.
I think in recent years, I cannot say we've seen a major increase in demand. I think similar to conventional insurance, the Takaful business is very price sensitive. It is not necessarily going to the Re-Takaful capacity. They are going to where the capacity is available and where the pricing is competitive. As brokers, we would do the same thing, while we would always try and give some priority to the Re-Takaful operators. However, when the business seems to be moving behind the most competitive markets. And I agree with Anne, there's also, what's happening is also a reflection of the overall conditions of the London market. In recent years, we've seen a lot of the business moving away from the London market to some of the regional hubs and some of the other European markets. And the incentive behind where the business is going, given the lack of any direction by the stakeholders or the shareholders insisting on Re-Takaful capacity, I think the business just goes to the more efficient carriers. Pakistan might be a good example, because maybe the increase from Pakistan is due to the regulator there insisting that all placements now are done with Re-Takaful, and that's why we've seen the business maybe shifting towards the Re-Takaful operators. when this is not there, I have not really witnessed much business coming, or more business coming into London.
So that might point to Max's nudge theory that there may need to be further regulation across the relevant Islamic jurisdictions. Maybe we'll come to that Zubair a bit later. Dave, just pick up though on the kind of, I suppose, public policy aspects. That's obviously something dear to your heart. Do you think there's anything further that kind of UK limited, the government or policymakers can do, or have we got to a point now where the environment has been created for the product here, and it's now to the market to decide whether the demand is there?
From what I see, our government are still very keen to promote any possibility to grow this market. So if they're looking to grow Islamic banking, Islamic investment, etc., then I'm sure we can work with them such that their messages to that community could be, oh, and by the way, there is a market there that can also insure these products in a Sharia-compliant manner. It may be a stretch to take it into a mandate type position like Pakistan. I think that's more of a, you have to search for it, and if you can't find it, you can go conventional, something like that. But if our government were to say that, I'm not sure that is the sort of public policy that trade associations pursue, i.e. mandating or compulsory type coverages. We prefer sort of free markets as such. But to my mind also, the London market is involved in many discussions with government about the post-Brexit world. You know, the new future trade agreements that we can negotiate with many countries. Some of those countries have been identified by the government that have a significant Islamic population, who may therefore wish to use Re-Takaful more into London on the back of that trade agreement, if it includes a financial services element. Another continuing and interesting dynamic to this, not so much pure government, but city of corporation type activities, the Lord Mayor of London's promotional visits abroad. As some of you may know, he's currently in Malaysia and Indonesia this week to promote the city's role to provide products to the Islamic community in those countries. So all of those factors continue, I think. You don't stop that work. That's a continual process for any trade body. The IIIL will have a voice in that, as will the individual entities who are members of it. Some thoughts there.
Yeah. And Zubair, I guess there are probably 2 points for you. I mean, I know you spoke passionately last year about the principle of necessity. Perhaps we can pick up on that again in the context of Re-Takaful and see how your thinking's advanced.
Thank you. Previously, in the previous conferences, I've always been critical about Takaful and Re-Takaful. And you're probably tired of me hearing me saying that we need to prioritize Takaful over conventional, and we should not abuse the principle of necessity. You're probably tired of me hearing me say that. This year, I'll probably take a different approach, a positive approach. And I think, personally, Cobalt's observation, I think in the previous year, alhamdulillah, from a direct Takaful, direct insurance perspective, we have seen a little bit more discussions. We have seen referrals. We've seen people question Takaful, take some quotes. Again, Re-Takaful as well. We've seen some positive approach towards that as well. There are more Takaful providers asking to reinsure from a facultative and treaty perspective. We've seen those discussions, but we need to work more to change those discussions into transactions. We need to see people take and buy these Takaful policies and Re-Takaful policies. To what extent is the principle of necessity still being abused? I think it's still being abused a lot. People are still using the rule. If you consider that 70 to 80% of the Takaful business is being reinsured conventionally. So you can see that there's a lot of work required in this area. A lot of work is required in convincing these Takaful companies to buy ReTakaful policies. Now, why are these 70 to 80% Takaful companies still going conventional? Now, there are various reasons. I spoke to a few Takaful providers, and the common answers are obviously rating, pricing, and lack of capacity. These are the usual answers. That's why they are going conventional. Some Takaful providers, after the recent runoff of some high-profile ReTakaful companies, some Takaful companies have lost confidence in ReTakaful because they see that these ReTakaful companies have gone into runoff. They need some security. They need reliability, and that's why they go conventional for the rating and the reliability. Some Takaful companies, they are in their comfort zone. They like to be where they are. They have done conventional previously and then to continue to do conventional. We need to get to them and convince them that there are rated products available, the pricing is competitive, and there are capacity out there. You need to explore, you need to advise the broker. You see, there's already an existing relationship between the client and the broker and the insurer. These relationships they go way back. And it's very difficult to actually come in and break this relationship. To say, no, broker, you won't go and get conventional. You need to go and find Shariah compliant capacity.
Should we bring the broker in at this point? It seems like an appropriate...
I will pass it to him. Let me drill him a bit more.
Time for a talk.
I think it's quite easy to blame the Takaful companies for not using the Re-Takaful capacity. But I think the reality is, as I mentioned earlier, it's a matter of supply and demand. The reinsurance market is extremely competitive. The brokers are under a lot of pressure. They're up against competition. And they'll always do their utmost to ensure they're getting the best deal for the client. And the case remains that the capacity and know-how at the Re-Takaful level is nowhere near sufficient to cover the Takaful demand. I mean, we've currently seen a number of pure Re-Takaful operations go into runoff, and that sent a very worrying message to the market. But even if you look at the existing established operations, I think we can hardly find an example of an independent Re-Takaful company writing pure Re-Takaful business. The only way to survive as a reinsurance company these days is to offer Re-Takaful as a product, maybe as a window, maybe even have a separate operation, but as long as it's part of a parent company. And I think that will continue to be the case. The reinsurance companies lack critical mass to write pure Takaful business, particularly when we factor in that on average, in most markets, the Takaful companies are suffering from higher operating expenses and higher average loss ratios. So it wouldn't be feasible for the Re-Takaful operations to just focus on that. And I think trying to come up with ways to force the Takaful companies to see their business in a certain way is a very short-term view. It should come the other way. Once you do have established Re-Takaful operations who are giving top quality service and giving the capacity, automatically the brokers and the clients will find their way and their business will find their way to those providers. But as it currently stands, I think most of the brokers will approach the Re-Takaful operations, but especially at the early stages when you're looking for lead capacity and pricing and know-how, there are still, in most lines of business, especially the specialized lines of business, that end up coming to the London market. Because the London market doesn't receive the vast majority of the simpler risks that are being written in the region. It's the more sophisticated lines and risks that come to London. And there, we still are lacking the expertise and capacity on the Re-Takaful side.
And I don't know whether you wanted to come back. I'll come back to you in a moment, Zubair. I just wanted to pick up, because I think there seems to be a bit of a disconnect in the sense of the expertise and capacity, because I think certainly the Takaful London market, if you like, would say 10 markets, a lot of expertise in those specialist lines, and is it, are those underwriters making it known that their capability to write those specialist classes is there? I mean, Anne, do you want to pick up on that maybe?
I agree with what you've been saying on the whole. I think one of the issues that the market is struggling with, from my sense, from an underwriting perspective, there is a chicken and egg situation whereby the brokers need a robust market to go to. And to my mind at the moment, yes, there are people out there, capacity providers that are willing to do it, but it's a little bit piecemeal at the moment. And of course, with the current restrictions in the market, the crunch on capacity and the low pricing levels, of course, organisations are not going to go out on a limb and suddenly expand into this area. One of my observations has also been, over the last year or so, we look to research areas of business, and it's very difficult to get your hands on very sort of robust, tangible statistics from the regions. And of course, we can sit there and say, but we know this business runs well, etc. But underwriters and underwriting companies look for robust data to make that leap of faith. So we've also got that issue. I think we all know the demand is there, but in order to promote the products, it will require more robust teams of people actually just specialising in this. And of course, there are examples of this across the market that do this. But at the moment, yes, there are a number of windows operating to provide, in particular, I think, political violence on the treaty side has been one area that we've been able to work with successfully. But I think other times we do see that we are precluded from quoting a piece of business on a Shariah compliant basis because that same provider has also offered a conventional quotation. And of course, then you've got an additional cost involved because nobody can work for nothing, and on it goes. So it's this step-by-step process, and I think if the pricing environment were more buoyant, then obviously things would be a lot easier for organisations to deploy more resource into this area. But the market is what it is, and you've got to trade with it as it is. So, do I blame the brokers? No, of course not. I mean, it's always easy to blame the brokers, but it's us as the underwriters having the robust data that I think causes a lot of problems. And of course, other more developed markets, say the US is a classic example, that all the data was sorted out years ago, so everybody gets it come in and it's all easy to manage, etc., etc. So, but we don't have this luxury in the region, so that's it.
I just want to come in here and just say, we're not blaming any specific organisation here. We're not saying that brokers are wholly to blame. I think everyone needs to play their part. If you think about the Islamic finance industry as a whole, and only 2% of the entire Islamic finance industry represents Takaful, then we have a concern here. And there's not only one organisation or one individual, one part of the industry to blame. You can't blame the brokers for it, or the Takaful operators, or the Re-Takaful operators, or the underwriters, or the scholars. But we need to work together. This is very important that we work together, we identify the issues and work together. From the broker's perspective, I mentioned that the brokers need to offer this product to their clients. From the client's perspective, the clients need to demand the product. The underwriters, they have to be a bit more flexible and advise their clients how to improve the underwriting. So, and the scholars need to make sure that the Takaful product is being brought and the principle of necessity is not abused. So I can't say only brokers are to blame. Everyone has their role to play, and everybody needs to play their role.
A couple of other observations, David. If you look at, Max quoted the London market premium as $90 billion. 55% of that comes from UK clients. Another good 25 at least from US. Very little comes from Asia or Africa, i.e. Islamic. So, as has been said before, most of it is retained locally or written locally in some form. Could be a Re-Takaful company or whatever. So I wonder whether we should be focusing much more on those UK clients, the large commercial clients who are clearly using Islamic finance for construction projects, all sorts of other investment in the country. And as Zubair says, have that dialogue between all the interested parties at that initial investment phase, perhaps using government channels to assist that. I think we're not there yet to get that business from the other countries. It's more likely to stay local unless it's highly specialised, and then it comes to London and there's no capacity or ability there to do that in a Takaful manner. That will be conventional, I think, at the moment. So just a thought whether we should work with the UK stakeholders from the ground up, so to speak, to promote this more.
Yeah. And can I just come back to the data point you talked about? So is that a lack of underwriting data at client end or lack of underwriters' own data, as it were?
Look, I think it's a combination of factors. I think that clearly if you're working in the London market, London has set the standards in terms of as much data being done online, slips online, transactions online. So it's setting the pace. And of course, say if you're working with transactions out of the US or Europe, the clients and the brokers they've built up to this over a number of years to get the data all cleaned up, for want of a better word. So, of course, as an underwriter, you'd be sitting there, you've got a certain amount of income you can write in a year, you're under a lot of pressure from your management, you're going to go for the easier transactions, the ones that give you the data quickly, that require less of your time. And on some of the regional business, we're still not there. It's just a learning curve, that's all. Nothing more than that.
And Mohammed, is that an issue that local conventional reinsurers face?
I think the data is a serious issue, and it is at the primary level. If we focus, for example, where a lot of the Takaful business is concentrated in the Middle East and North Africa, there is a data problem there, and that's a problem facing both the Takaful and the conventional companies. It's not just the Takaful. And I do agree it's a learning curve. We are seeing some improvements. You do see huge discrepancy in the quality of data from one market to the next, and within the markets, depending on the companies. We're also seeing some movements by some regulators. You'll see, for example, can give the example of Saudi Arabia, where the regulator there has taken a lot of steps to improve the quality of the data. We take one line of business like the medical, for example. Medical is a line of business that could be easily abused when it comes to data. The sharing of the data is not accurate. Sometimes the clients themselves and the brokers will not gain the accurate information or not pass it on. And SAMA made it kind of a requirement for any holding insurance company, when it comes to the renewal of their medical contract, that the actual insurance company is obliged to share the data that they hold with the broker and potentially with their competitors. And that has had an immediate and significant impact on the quality of the underwriters, on the appetite from the international underwriters to look into the business. So I think, yes, it is a problem, and that's something that needs to be tackled locally. It's going to be very difficult to expect the London market or the international reinsurers to solve that problem. They could assist in terms of consultancy or advising the kind of data they want to see, but it will really be up to each individual company and each market and its regulator to improve that quality.
And I guess sort of increased focus on data protection and data protection regulations doesn't
Yes,
necessarily assist.
GDPR, I mean,
No.
the amount of time we've spent here on this issue compared to maybe our counterparts in the region is significantly different. So I don't think it's as a hot topic in the region as it is here. But again, as we've seen with a lot of other issues, it usually starts, and soon after it starts getting implemented in the Middle East and North Africa and some of the other regions.
Yeah, I mean, the direction of travel is never backwards, is it, on those things? So, yeah. So I think we've got a fair to say, probably a reasonably gloomy picture at the moment, I think, of where we are. I want to see if we can brighten it up in any way. And come on, there must be some positive things that have been going on in the London market. I know we had a delegation over from Saudi last year. How do you think that was received, and do you think that's going to be a positive?
So when I spoke to David yesterday, we were having similar conversations to what we're having now, and I just went, oh my goodness, I'm going to stay positive tomorrow. So look, from my point of view, we've at Cobalt, we've definitely been seeing more activity. Some of it will become clear. Something will become clear tomorrow that's being announced, but I can't say what that is at the moment. And then over the next few months, we're about to launch a UK-based product. So again, that will be something very positive. So we are seeing more demand. Having been based in a regional market in the past, one of the things that was very clear to me was our roles as educators in these markets, and I don't want that to come across as condescending, but as assisting and helping with the local markets, and also not making the business fit what we do in London. We have to be amenable to setting, to be able to provide solutions that suit the local market. So to that end, I think Max Taylor kindly dropped me into helping with the Saudi education program last year that was run by Lloyd's, and I have to say, with some reluctance, we agreed to have a delegate because we're a small team. But I have to say that what a success that was. I mean, it was a fantastic 8 weeks of working not only with one individual, but meeting all the ladies and gentlemen that came over from Saudi Arabia. I mean, it was just a great experience, a great knowledge sharing experience, dispelling some of the ignorances around culture in particular. And for me, that was a massive positive experience. And I think it just goes to show that as a business, we need to be open to this, not just say in Saudi, but in other countries across the region. Be open to it, to education programs. I know that it takes up a lot of people's time, and sure, it was time consuming, but I think, the upside for me is that I have had almost daily contact with the delegate we had since he left in November. So I see that as a real positive side. I know that it will, and all of these delegates returned having had a positive experience, and they're going to be the business leaders of the future. And even if half of them only carry on working in the business, I'm sure they're going to have significant roles in the business community, which is going to directly impact us. Now, it's a long-term move, but it will have an impact over time. So I just would implore businesses, brokers, underwriters to be open to having interns from different regions, not because we can do things better than them, but because we can show them how we do things, and we can learn from them how they do things, and hopefully we can meet somewhere in the middle. That's all. That's my speech on that one.
Yeah.
So,
Zubair, I mean, obviously you've been in the Cobalt office during that time? Do you have any observations as well on?
I've seen demands in other areas, other products. For example, I've been approached several times to find capacity for crop insurance, which is apparently a huge demand from the Southeast Asia area. Recently, others have asked for me to find a solution for them. It was actually a lawyer that approached me, and he said he had a lot of Muslim clients come to him to drop the will. And when they do the will, they have properties worth over £300,000, and they don't realize that, when they pass on, that property will be subject to tax. And if the tax is not paid, then the property can be possessed. So they are looking for some kind of insurance to protect them from those tax obligations. So I've seen lawyers asking me to provide them a Shariah compliant life insurance policy. I've just earlier had a conversation with someone to see if I can find a warranty insurance for their company. So there are demands, there are requests. Obviously, as time goes on, the more demand coming from the clients, then we can approach the capacity providers to say, here's the demand, please supply. And so then we'll go on from there slowly. But I think it's a positive that Takaful is a growing industry, and we are seeing newer products. We are seeing demands especially from Pakistan. I've seen many requests from Pakistan, probably because the government is active in this area, and they are asking the Takaful providers to go and find Re-Takaful solutions, and they're actively involved, and the scholars are involved in this area. That's why we're seeing more demand from the area.
I would add, David, that London is an immensely cosmopolitan city. The London insurance market is similarly so. We have many decades of finding solutions for all sorts of strange types of risks, be they big or small, and that continues to be the case. We continue to promote those capabilities. We also continue to modernise London in terms of its operations. The London market will soon be much more digitised than it is even now, and it is making steps already. That in itself could enable overseas clients to access the market very easily, almost direct peer-to-peer type contact in certain scenarios. We're also looking to create a market that's more inclusive and more diverse in terms of the workforce, and also the skill set to match the changing needs of the way we trade. So all of that should be seen as positive, I think, that London continues to be that open, engaging market that clients will want.
Yeah, I mean, just as an open point for all of you here, I would encourage people to look at what Lloyd's is doing in terms of its kind of business plan and proposed changes, and the opportunities that might present to you all in terms of bringing business to London. There are various ideas around capital, and that's certainly something that I've been involved with Lloyd's around how we can look at a more flexible capital base. And obviously ideas like syndicate in a box immediately spring to mind as being things which might be appropriate for certain product lines and so on. So I think that there is that huge amount of opportunity in London, and London continues to evolve and seek out ways in which it can attract business, Dave, I think would be fair to say. I mean, it's the way London is. Mohammed, on that point, how does demand get increased? What would your kind of advice to the Takaful capacity providers be?
I think the issue continues to be on the primary level. The Takaful companies, I always say that the Re-Takaful will follow once the Takaful is there. And I think there is much more the Takaful industry can do to increase their presence. I'm very skeptical always about the figures and the growth in the Takaful industry. Every year we come and sit here and we say how much the Takaful industry has grown, and it is true. The Takaful companies are growing. A big part of it, I think, is because most of them are relatively young companies and are enjoying relatively high growth rates. But I think the question that we need to really address is by how much has the Takaful industry increased the market? And that was the promise, original promise of Takaful when it first started, that it's going to bring in new insureds to the industry, and therefore the industry itself is going to grow. I'm afraid, in my own experience, I've hardly seen that. The vast majority of the Takaful companies have competed on exactly the same business that was there before they came to the market, and usually the only way they could win the business is through relatively more competitive terms. I think with the exception of Malaysia, most of the other markets are primarily focused on general Takaful and working on the commercial risks. And I don't think that's really where the value added should have been. I think there is much more potential on the family Takaful. I think also, given the demographics of some of the countries, and a lot of the governments now are moving away from their social responsibility, trying to take it off the government budgets and moving it to the private sector. I think that creates an opportunity for the personal lines and for family Takaful. And this is where I think the Takaful message is most effective, and where a lot of the populations in some of the countries where Takaful is available, they will be more influenced or more likely to buy Takaful products. But if we continue focusing on the commercial products and competing on the exact same business that has always been competed on, I think the chances of success are lower. And of course, it's very difficult to get any real data on how much the market has grown. But I think this is worth some attention. From my discussion with most of my Takaful clients, most of the business they've written was business that was insured the year before with a conventional company, and they've won it over. And if we really need to grow the market, the companies need to focus on more niche products on the personal lines. And once that happens, I think the Re-Takaful capacity will also follow.
Zubair, do you have any comments from the Shariah's perspective on what you can do as a group of scholars to perhaps provide that product differentiation? And
Max mentioned in his speech, which is that scholars need to be involved in Takaful, more involved, and I agree with him completely. I think scholars, I don't think it's enough for scholars to attend the Sharia boards and discuss Takaful options at that level. I think there needs to be scholar hands-on involvement within the company, in-house, looking at working on a daily basis, making sure the activities and the insurance process is Sharia compliant. For example, if there was a Sharia scholar within a Takaful company, making sure that all the transactions are done in a Sharia compliant way, and if there is truly a need for to apply the principle of necessity, then the scholar there and they can apply the rule of necessity. The scholar needs to scrutinize the deals. For example, if a deal comes in and says that we need to do this in a particular way because there's lack of capacity, then the scholar can question that. Have you looked anywhere else for Sharia compliant capacity? The Sharia scholar needs to look at the quotes, for example, to make sure that the quotes from a Sharia compliant capacity provider is not excessive or is excessive, and they can apply the necessity rule. So I think scholars need to be hands-on, get more involved, get involved with the day-to-day business, and hopefully that will, I think it is needed, and it will improve the Takaful industry.
Okay, thank you. Maybe that's a good point at which we can open up to questions from the floor if we've got any questions. Gentleman back with the red tie. No, it's not on, but
Hello. Yeah. Angelo Anson, I work for Aon Market Security. I think the issue that the brokers have is I mean, the role that we do is to ensure that we place business with markets of good credit quality. So we do have Takaful markets in our so-called approved list, but they're on the whole very small. And it goes on the list because our brokers on the ground need Takaful quoting markets. But I think what I'm trying to get at is, I mean, for the Takaful market, I think to increase their presence. I know it's not all about size, and it's, you know, a lot of the Takaful companies quantitatively, at least in recent years, have improved both on the earnings and operating performances. But on the whole, they're still very small. And we're finding that, despite what you read in all the publications out there, that a lot of Takaful companies can monopolize on the economic growth of some of the Asian countries like Malaysia. None of them, I think, from what I've seen from the reported accounts, none of them are able to benefit from the economic sort of growth in Malaysia because of their size. And a lot of them are just writing personal lines business. So, and I think the cost structure is also something that we need to look at, because part of that is, I think, the reason why they're not growing from the capital-based position very quickly. So, and you know, it's a competitive market, and we're seeing, from at least from a capital-based position, growth has been very small. But yes, I mean, GPW is on the rise, but from a very small base. So I think there's an issue all round, I think, not just, I mean, there's the structure, the cost element, I think the capital base, and as I say, I mean, we'll all look at and apply, every market is unique, and I think you hit the nail on the head, market information, what percentage of their GPW is, I think all around market information is lacking, and also lack of transparency, for instance, in terms of the shareholders' investment side, how that is being invested on the policyholder side, deficiency of policyholder reserves. I think there's a lot of, and I think you actually hit the nail on the head on Lloyd's, on Cobalt. I spend a lot of time educating the market security department on how unique the capital structure is of Takaful companies. And because of their size, I think I need to do it. But I think that there's something that has to be done all round. I think mainly it's on the size, the education, the capital structure of the Takaful companies. I need to remind them once every 2 years how it all works, because they're all relatively small. The earnings performance is volatile, although it's improving in recent years. So I think it's the issue, I think, is all round. So I don't quite really know how to go about it. Thank you.
So I think, thank you, thanks for those observations. I think very interesting, and bears out a lot of what we've heard said here. Gentleman in front.
Good morning. Actually, I think the panel has painted a pretty bleak picture of the facets of Takaful and Re-Takaful. So my question would be particularly to Mohammed. Mohammed, on the non-marine treaty bouquet side, how difficult is it to place almost exclusively with Re-Takaful companies, bearing in mind that most, if not all, the major reinsurers have a Re-Takaful arm? And then the question that follows that, is it an issue of capacity or quality? And finally, then, we are not focusing as an industry on the thin edge of the wedge, because probably, like conventional reinsurance as well, capacity constraints exist in many specialized classes. Mufti mentioned agriculture. That would be in reinsurance as well. You could have difficulties in placement. So my question to you is that if we take the large sectors of non-marine treaty bouquets, how difficult is it? Thank you.
Thank you, Mr. Akub. I think if we calculate the total Re-Takaful capacity, you might find that it's sufficient for some medium-sized treaties in the region. However, the reality is, yes, there are several Re-Takaful companies, and if we also include the Re-Takaful windows, because without including that, then I don't think we have sufficient capacity. The problem is that those capacities also, like the conventional reinsurers, have their own appetite, have their own target markets. So if you go to most of the markets where we operate on a treaty side, I say in every case it would be almost impossible to complete 100% of the placement with Re-Takaful companies. And that's partly because either the program is big or because not all the Takaful or Re-Takaful operations have appetites for this kind of business or for this territory. So I think the capacity issue is a problem, and I think is becoming even more of a problem because we have lost some capacities, pure Re-Takaful capacities in recent years, which has had an impact. But my bigger concern is, on the long run, it seems to me that it is extremely difficult to expect a new startup operation to come up and write pure Re-Takaful business. I think the only successful models we're going to see moving forward are Re-Takaful operations that are it's either a window or it's part of a bigger conventional company, because then they can take advantage of the diversified pool that the parent company has. They can share the expenses, and I think, if you look at two of our diamond sponsors, be it Hanover Re-Takaful or Africa Re, I think their model makes sense and is successful because it's part of a bigger organization. On the primary side, again, I think for the Takaful companies, because also they're all relatively young companies, they're facing the exact same problems that a conventional new company would face. I don't think the problems they're facing is because they're Takaful necessarily, because they're writing all kinds of business. It is extremely difficult now in these market conditions, I think anywhere in the world, to start a new Takaful company, and even more difficult to start a new Re-Takaful or reinsurance operation. You're competing against huge companies with a very diversified pool, and they are in a much better position to take advantage of any new market offering or opportunities than a new company. And also add to that, given the significant increase in the number of companies, a lot of the markets now are facing significant shortage in skills. Attracting skilled management and employees to new companies is becoming very difficult. And again, that's why some of the conventional reinsurers who have established Re-Takaful operations are able to utilize their existing resources to service the Re-Takaful business.
Time for one more. Gentleman just over to the right there.
Good morning, Tariq Osman from Sudan. I think my question is for the whole panel. It's a philosophical one, sort of. Do you think the viability of Takaful on an even playing field without changing the grounds or getting legislation to protect it, can it compete with conventional? That's the first thing. If the answer is yes, then I think the whole field is open and you need to create the mass or the numbers by itself by competing first, and then the demand will show itself. If not, then you have to create a critical mass of a new market that's a completely different market, which you were talking about before, which isn't touching the normal conventional insurance. And that market in itself will start creating the Shariah basis because they'll be asking for the Shariah basis out of it, which is basically out of free will, rather than being legislating or things. So my question again would be the panel, and I think the bleak idea would be if we can't develop the product itself that it can compete with conventional in itself, then the product itself is not the right product without any legislation. It's just made for a specific niche market.
You should start with Zubair. Go on.
I've had this discussion before. Is Takaful a completely separate product? Do we compete with the conventional market? I don't think it's a completely new product itself. Takaful, it's what conventional insurance does and what Takaful does. The objective is the same: is to protect assets, is to manage your risks, and in that sense, it's the same product. It does the same job. Where it's different is conventional the process is a particular way, and Sharia compliant insurance, Takaful, Islamic insurance, has a different process. And that's what makes a Sharia compliant, it's the process. So I don't think we're competing with the conventional world, where we're basically working with the conventional world, but in a slightly different way, slightly different product, I would say. In that sense, I think you're right, there's a lot of work to be done. I think we need to educate people that this is not something completely different. You won't have the different issues, different obligations, different requirements. It's still the same, but the process, which is worked behind the scenes, that's different.
Let's run up the line and then Zubair, you go next.
Oh, well, just briefly, yes, I hope so. This is my answer to that. I think you need competition, you need competing types of products. And if there is the continued demand for this type of product from certain jurisdictions, then it needs to exist. So yes, I hope so. But the governments may need to help.
From what I see, the majority of quotations that leave the business I work within are competitive with the equivalent conventional terms. Now, okay, the broker may then go to another carrier and get a conventional terms, and then that changes completely. But if we're working with a carrier, a number of them commit to us to, if they've released conventional terms, they will release the same on a Sharia compliant basis. So now I appreciate that we're only servicing a small percentage, but I would like to hope that we can compete with the so-called conventional business, and but it's baby steps at the moment, so still a long way to go, but definitely sort of positive shoots appearing.
I think we need to differentiate here between competition on individual policies, on individual treaties. Of course, the Takaful and the Re-Takaful companies will compete against the conventional insurers. They will win sometimes and other times not. But the key issue here that we cannot forget the basics of the industry. I mean, insurance, reinsurance, and retrocession, the whole concept is based on maximum possible diversification of the risk. The bigger the pool, the better off everyone is. And as such, I think Takaful needs to be seen, as mentioned earlier, as a segment of the industry overall. Because it's going to be, I don't think it's financially feasible to think that Takaful, Re-Takaful, and we're going to have retrocession on Takaful independent of the rest of the insurance market. I don't think it'll be cost effective. I mean, we're now discussing the lack of capacity on the Re-Takaful side. Let's not forget all the Re-Takaful are buying retrocession from the conventional market. And that will continue to be the case. So while there is competition on the daily running of the business, I think ultimately this industry is part of the insurance industry as a whole. It complements it. It's try to expand the entire industry and should not be seen as a competitor to the extent that we're trying to create a completely separate market detached from the existing insurance industry.
Okay, thank you very, very much. And I think we'll end on that note. I think it's a very broad-ranging discussion and an interesting point to end there on where we see the market actually today and developing. I mean, for my own part, I'm an optimist. I think the issues that we've talked about today are about joining dots. I think Anne talked about the education program. I think nothing happens by chance in this world, and it's very important that the creation of relationships and understanding of how things work is taken forward, and from that business develops. We see that in our own business, and it's the only way that any business really can develop. It doesn't just happen because we have something called Takaful. It involves a lot of shoe leather and understanding of what that product is. And yeah, there is a point of differentiation clearly with this segment of the market. So I think with that, I'd like to thank the panel. I think it was a fantastic session, and if we could thank them in the customary fashion.